Next is DBXEU, which of course is tracking the European market, but please note that that excludes the United Kingdom. The UK, of course, is part of the EU, uses its own currency, but for one reason or another, this particular thing tracks the Dow Jones Stocks 50, which is not to be confused with the American Dow Jones. It's an index of 50 of the largest stocks from Germany, France, Italy, Spain, and the Netherlands, okay? Capitalization weighted, just the same. So the largest stocks are going to be the mega German industrials like Siemens and the likes, BASF, which makes chemicals. Then you can add in a few of the big Frenchies like Total and Sanofi Aventis. That's oil and pharmaceuticals. And then the Italians and the Spaniards get a turn at the trough. A couple of smaller companies, but like ENI, which is the largest of the Italian oil plays. You put all of that lot together and you've got quite an indexing instrument which really is going to benefit if the European economy shows a bit of character and a bit of courage. The market value in issue of these DBXEUs is about 2.1 billion rand. So you can see it's not quite as popular as the US one, but interesting nonetheless. Dividend yield on this thing seems higher for some reason, 2.85, but let's not go into that too much. Okay, so is there a secular recovery going on in Europe or not? Because if there was, then, you know, stocks like Deutsche Bank shouldn't be under, you know, a pall, and, you know, there should be a revival in consumer spending and so on.
Yeah,
Yes? No?
I think this would be a call on the euro sector and, exactly, the recovery of that sector. I think generally it seems to be going through a gradual recovery.
Very gradual. But
yes, remember there is still quantitative easing.
yeah, like Draghi keeps
Eurozone.
coming out and saying he's going to use his bazooka
Yes.
and do things to stimulate the economy. And why is that? Do you think it's just that it takes a long time to unpick the negativity arising out of the last big slump?
Yeah, I think, look, central banks the world over are using these sort of unconventional monetary measures to look to refloat the economies. I think to some extent it's sort of a global currency war, if you will. The US had previously engaged in quantitative easing, still very low rates. Japan has now moved into negative rates and a lot of quantitative easing. So Europe doing the same, I guess, really to keep the euro under a little bit of pressure, make the currency more competitive, and then also German exports and those other large companies make their exports more competitive, which I think to a large extent drives those big multinational companies. So that's really the reason, and to stimulate, I guess, local investment as well. So I'm fairly bullish on Europe. I think there is some concern, and this is our discussion earlier about Deutsche Bank, is that
financials.
Financials and the banks, where there were quite a lot of issues with the sort of loan books of these large European banks. That's just been bubbling up to the fore, I guess, with particularly the weak oil sector and energy and commodity sector. Are there bad loans lurking there that could pose some sort of systemic risk? I don't believe so, but that is what the market concern has been.
There's the share chart of those, and you can see also doing well, and that's a reflection, as you said, of the euro weakening or strengthening rather to the rand or rand. So you own these things in rand, and that's been supporting them. Okay, so is it the same story? I mean, at the moment, the German market isn't looking all that flash. The overall markets have sagged. So it's either a buying opportunity or it's the sign of a new, somewhat muted couple of months returns ahead. You're a buyer of this one?
Yeah, look, I don't think, given the market outlook, my views, you don't need to rush into these things again. The rand, you know, is been a little bit oversold also against the euro, less so though. I would be more inclined to favour the European markets right now than the US markets, more on a valuation and I guess sort of, the underpin of quantitative easing. So if I were to choose between the two, I would choose Europe. I'm still not rushing to buy it right now, but I would certainly be watching it and looking for an opportune time to get in.
So hot or not?
I'm going to say not right now.
Not right now on a timing basis. Okay, I'm a bit more optimistic about where equity markets are, so I'm going to lean hot on that one. Again, the reason just being, frankly, that I think there's been too much of a fluster this year, and on balance, we should be due for some kind of bounce. As you know, I'm always the optimistic fellow over here.